Good afternoon, everyone. Let's continue to discuss this paper, Measuring Accounting Reporting Complexity with XBRL. So this paper addresses how to measure the complexity from XBRL text and why it predict misstatement, delays, and audit fees. Was done by the authors, published in Journal of Accounting Review. And the data only use SEC 10K item A. So this is a very special financial report and a very important one. And today we go beyond the summary and we will learn how to measure and read the tables like a referee and discussing the implications. First of all, I import part of the paper into the workaround. And it shows us like this. Not the whole paper, just part of them. So you can see the essential and the key of the paper. So talking about complexity, accounting, and ARC, accounting, reporting, complexity, auditing, and measure, and report, and accrue, financial accrue, and SEC, internal control, or GAAP, and accrue quality, and so on. So this is the keywords of the paper for your reference that you can remember. And the roommate for today's lecture, I will talking about why reporting complexity matters. We will focus on the papers addressing restatement, late filing, and auditing efforts, including how much money you pay and how much time you spend. Usually, listed company will request to release your quarterly report on time, like February 4, February 5, 5th, maybe around that day, that's on time. But if you release your financial report, delay 1 week, sometimes the investor will worry about why it delayed 1 week. So auditing delay is not a good signal usually. And some company actually release the financial report ahead of the announced date. Sometimes they will earlier, like 2 days or 3 days ahead. That means I have so much confidence, so I can release it earlier. So if you have a financial report delay, usually market will explain that it's a bad signal. And the key innovation is ARC, accounting report complexity, measured by this text. I just talking about the XBRL, like HTML, the same format, but that's used for website. This used for accounting report. So we usually have a lot of text. So the paper is not just read the 10-case paper, 10-case report, and to do the readability, FOG. They create the text to measure the difficulty and the complexity of the report. So there have some validation. Does ARC move when complexity event happen? So table 2 explain this. And the main result is misstatement and the material weakness, tables 3 to 4. And then because table 5 is not significant, I skip that. Accrued quality is not significant. So we go into accounting account, which is a delay in accounting fee, tables 6 and 7. And then I have some critique and the extension for this paper. So let me reflect this paper again. The whole story, Journal of Accounting and Research, what the paper's results and what the authors addressing. So the authors argue that accounting complexity is not just how many segments or how long the 10-case report. Because the old paper usually measure how diverse your company, your business, have a foreign segment, business segment, or geography segments. This paper doesn't measure that. Even though the paper control for that, but it's not the main story. They not measure the length of the 10K report too, but they control for that. So they propose the accounting complexity measured by the numbers of the distinct monetary tax in item A of 10K financial reports, plus the notes. The footnotes is also very lengthy, and the words very, very small. So it's very hard to read. So if you have a 10K already, the 10K is annual report. Like 10Q is quarterly report. So 10K included 4 10Q. So this paper measured the annual data, but only item A. So that's a lengthy report, you can imagine. So more text means more accounting concept and more GAAP knowledge required to prepare for the report. So that means that you also create more opportunity for the errors and inaccurate GAAP application, and it raises audit risk. So many papers measure that more tech actually have higher risk. So you can also have the same direction, which is correct. They also do some validation. Does ARC move when complexity even happens? So the answer is yes. When acquisition, restructuring, discontinuing operation, or new leasing, or write-downs, or new debt issuance, all this activity will increase the complexity. And also, this complexity may cause to some accounting issues. So accounting reporting complexity is positively associated with misstatement. What is misstatement? You already sent to the SEC your financial report, but they may respond to you that it is inaccurate because they miscategory some items you have to correct, and then send back to you and give you a deadline. You have to resubmit it again before the deadline. So when you have a misstatement, you have to redo the financial report again. So this is a misstatement. Material weakness, like SMCI, it probably belong to material weakness, internal control, because you have internal control, so you have some problems on facing the investor. You have to have much better governance board director to correct the weakness. This belong to like a weakness, material weakness. We call it the 重大缺失. Sometimes, you know, the minor is okay. It's like we also say that the going concern, so different degree. Some concern is a serious or very trivial. Material weakness is not like very trivial. It's fatal. So material weakness is very serious. So can be a measurement for the accounting complexity And also, audit delayed, it's a serious problem. Don't imagine only 2 days or 3 days or 1 week only. It isn't just couldn't happen if you are a listed company. You just have to keep up with the deadline. Everyone have to keep up with the deadline to report your financial statement, or market will downgrade or may have some noise about your company. So even just 1 day or 2 days, it's not allowed to happen. Now, auditing fee will be raised again if something happened like this. So usually we have some complexity when the firm have a accounting specific complexity. We can avoid that. Or like the tax or leasing or derivative, very difficult, right? So misstatement or materials weakness might be happening based on the broader activity or the much more diverse segment. So this paper actually doing a lot of work. So they include that if ARC raises the auditing committee, which is the only one related committee in the firm, might expect higher fee and delayed, and may have to set a better internal control mechanism to face all this problem. So this is the whole story of this paper. Questions? Okay, so based on my summary of the paper, and I resubmitted it again to the work crowd. It shows like this, so a little different from the whole paper. So everyone explains something, may have different instance about the original paper. So misstatement, accounting report complexity, auditing and the fee and the delay, and something arises, GAAP standard requirement and validity is disaggregated, is the paper's key point. Motivation, why complexity is a finance and a governance topic. So there have diverse reasons, but restatement and the material weakness destroyed credibility. It's very hard to get back to the original point once you have material weakness or you have a restatement in the past history. The stock price might keep a low level for a long time and then restart it again. So if you want to restart the original point, it takes time. So the investors might be hurt from your difficulty to face the report. So this is an important governance topic. And late filing, even no matter it's 10K or 10Q, annual report or quarterly report, it's a visible signals, which is back signals. Sometimes it's not guaranteed to be a bad one, but usually not good. Because I just mentioned diverse company may have some problem, but it's acceptable, but you just have to be avoid in advance. You already know that you might be delayed for the report, so you have to prepare it earlier. This is what you have to do. So late filing are visible signals. So this is a valuation by the public. An auditing fee, not just a cost. It proxy for the auditing efforts and perceived risk. Higher risk, higher fee is a very, very rational. the key question is, how do we measure the accounting report complexity constantly across form? So this is the major contribution of the paper. Very early, these authors using text, and then you can check like this 5 years later, and a lot of paper following the XBRL to count the other complexity, because this complexity is item A. And 10K or 10Q report is a lengthy report. You can pick the other. You can pick like a tax. You can pick like a leasing. You can pick a issue like a merger acquisition. Then you will obtain different tabs to do that issue. So this paper only pick like item A in general, not specific to any issue. So I will ask you the questions later, but you can take a look at that and keep it in mind. And maybe after a couple minutes, I will ask you using Slido. My question is, if in one word or 2 words is fine, what makes a company accounting reporting complexity? For what reason a company will have accounting reporting complexity? If you're using one word, like an event or like a law or something, you can just give me one answer that may cause complexity later, not now. But this paper has some research questions you guys already present. And so in general, it's just complexity, how to measure. And can it measure? Yes. Does the measure behave like a complexity? Should be moving after economic event that complicate accounting? Yes, right? Usually you raise this question, and the answer should be yes. And then you prove for that from table 1 to table 7. Does higher complexity predict lower financial report quality? This have some problem, right? Because this is another table which is insignificant. So it doesn't mean financial report quality is lower, but it do have misstatement higher and material weakness high significantly. Question 4 is, does higher complexity increase auditing efforts and outcome because it's measured by auditing delay and auditing fee? And this is significant. So we can say that yes, except quality. So hypothesis 1, 2, 3, 4, along with the research question. Higher complexity, higher misstatement, higher material weakness, probability, yes, we are hoping. And hypothesis 2, higher complexity have a longer auditing delay. So the paper saying significantly and related to each other, and also auditing fee is higher. So this is hypothesis 2. 3, complexity outperform common practice, because the paper also control like a business segment, geographic segment, and the foreign department operations operation unit, and 10 case length and the readability. They use the FOG, like a readability. Higher numbers means easy to read or difficult to read. If there's a lower number, that's difficult to read. So this is hypothesis 3. All these 4 main issues actually outperform those control variables. So hypothesis 3 saying that story. And hypothesis 4 is a mechanism intuition. So difficulty or complexity proxy for the number of accounting concepts to prepare and document or audit. Okay, so this is a general concept. Okay, so measure. The measure is numbers of distinct XBRL, the text. So this is the number and the dollars in item A of 10K annual report. So actually, I asked ChatGPT how to count those texts. And ChatGPT answered me that it's not easy, not difficult. You just have to let the Stata, because I'm using Stata software. And if you download the report, you import to Stata, and Stata can read. But because if this is a format like XBRL, so it's not my work, it's the computer's work. They already had like a tag in the column. So if you see NUM, and you see like a terminology, there have a dash for that. And all this means already had a tag. So it's a very, very, not so easy, but not difficult to count how many tags in item A of 10K. Just spend time. It's not a difficult level. It's a time spending work. So after you get all this data, you take a log, normalize it. You can get the complexity index. And this is more, we can say that more text and more disclosure items to prepare and reconciliations. So there have some problems later because we have to mention GAAP items. So more complexity, maybe like an operation complexity, the segment foreign operation number. And the other is linguistic complexity, this language readability. And the other is like a sheer lengthening. Longer report, more complexity. So this is I add some example for you to recognize how to make all this tag. For example, you can say that this tag like a barcode. If the paper or the computer read like 1 million in the 10K report, they are not reading the number. They are not reading 1 million. They are, because they are counting the tag, so they have to category. The label is 1 million is revenue or leasing or tax. They will category different tag. And each one is a number 111. And you can't accumulate all this number, the browser. So you have a 1, 2, 3 tag. So each number might label like a tag. Do you understand me? So they are not count the 1 million. They are count the different type of barcode. So more text means more disclosure items. So you have to calculate every more document and to co-integrate each other. And then auditing have to make effort to make sure that this is correct. Because some tag is not correct. You already not put it wrong place. So you have to correct that. So this is the XBRL tag mean. And I use Apple too. So the same as you present the case, Apple. 2025, I collect from SEC. The report like thousands page. You scroll down, you will not get to the end, so I will not finish it. Wording are very small and like this kind. This is just one screenshot for your reference only. You can see like they're talking about a lot of things. And each number happened to the company have to be released in more detail. See the comments for what's happening, beginning employee tax, employee stock plans, executive officers, and what's happening in a firm the whole year. Even one day, you have a lot of story, but this is the whole year. So Apple 2025 only, if you have lots of company over 10 years. So this paper only like 4 years data, but it's enough. Okay, so this is a very special SEC item A, 10K report. Looks like this. So we can explain from positive and negative complexity. From the positive, complexity may reflect economies, sophistication, larger firm, higher complexity, diverse firm, higher complexity, multinational firm, higher complexity. So it's depending on the organization, breadth, and their size, rather than opacity. So from the good side, it can explain like that. But on the other hand, complexity also emerge information frictions, but it's not a good one. So it may sometimes, they will explain like a special reason that just have some complexity happened, but it increased monetary costs and reduce the comparability. And firm-specific extension actually also hinder the comparison. And many other items not standardized classification structure may also, disattractive the analysis. So if your report have been always difficult to read, the financial analysis will not happy to read that. So complexity also cause some bad things. So this create a situation which stakeholders face greater difficulty in evaluating firms' behavior. So from the positive side, it's a good one. But from the negative side, you have some problem too. But this paper doesn't conclude which one good, which one bad, but it control all this. Something information friction, they control for that. And to look at whether complexity have some key issues, misstatement, and auditing fee, and the material weakness, and so on. So data only 4 years, not long. We're hoping that it can extend to like a 2025. And the data from 10K report, footnote included. And the outcome is 4 or 5 dependent variables. That's because accrual quality is not significant. So only 4 are mentioned in the whole paper. And in comparison proxies, they control all this. So interesting, table 1. This is like a take a log, right? So if you see 5, that doesn't mean 5, because the actual number is 3, 4, 5. Take a look, and it's like a 5. Yeah. A business segment, 1.9. Geographic segment, it's like a 2. Readability, 19. 10K length is 11. You will not understand the numbers, so you have to read the papers because all this have its meaning. But we have to focus on this. Dependent variable. So let's take a look at the enlarged one. So I only focus on misstatement, material, weakness, accrue, quality, auditing, delay, fee, actually. Can you imagine? Auditing fee on average, this is mean. Total number is $2 million on average. Actually, auditing fee, $2 million more. Very, very expensive. But I don't know why this is a accounting fee, like a take a look. It's like a 13. But if I use the E13 to reflect the numbers, it becomes like a $42,000. So there have some inconsistent in between. I'm not quite sure why it's happening. But on average, accounting fee is like a $2 million more. But if I use it like a log and to reflect to the real number, it becomes like a $44,000. So if we like take a mean average, it's like a 1 more million about for each firm annual report. That means you have to spend like a 3-4千万 for each firm to pay to the auditing. 3-4千万, maybe 6,000-7,000 千万. It's a high fee for the auditing. So if something happened, their standard deviation is so large. If you add all the standard deviation, it could be like a 好几亿, right? Yeah, so this is an auditing fee here. Delay, on average, just 7 days, -7. But delay 7 is like a mean. On average, delay very short. But even that is significant. And material weakness, only 8% have these problems. Misstatement, only 11% of the firm have these problems. And we can see the others statistic also very rational, right? And interesting table, and you know this whole story, you can see all this. This is correlation table, but imply a lot of information. Let's take a look at the correlation, which is higher. You know, 0.4 to 0.7, which we call the high median correlation, right? About 0.7 is a high correlation. 0.4 to 0.7 is middle correlation. And like 0 to 0.4, we say that the correlation is not so high. But reflect the formula into here. When it comes to larger than 20%, we can make some label. So complexity here. Larger size, complexity is high, positive, related. High fee, complexity is high. Quality high, complexity low, so negative, right? Longer report, complexity is high. So higher Longer report associated with a higher complexity. Larger segment or larger number of segments associated with high complexity. It makes sense, right? And also we can see the auditing fee. Business segment, larger numbers of segments, larger number of geographic segment or business segment associated with a higher fee. And if you have a foreign firms, higher fee. If your technical report is lengthy, higher fee. Makes sense, right? But if your quality is better, then it's associated with lower fee. Makes sense too. Let's take a little delay. Delay, the coefficient is usually low, right? Because only on average like a 7 days delay. But even 7 days delay, the coefficients become very significant. So higher complexity is associated with a higher delay. That means that. So we can remember even the delay days, not a longer time, not a long period. However, it becomes very significant in the table. Materials weakness or misstatement. Here we can see your misstatement is related to complexity, your numbers of segments, and your foreign division, and your readiness of the papers, and some other factors. Yeah. Okay. So a longer report have some problems too. Okay, so this is a very simple correlation, 2 plus 2 matrix. But if we take a look at the validation, then we can take a look at the key. You can see that the story from all these control variable, this is actually belong to control variable, not the main story, but we also control for that. So complexity, new acquisition increase the complexity, right? Leasing increase the complexity. Asset upgrade increase the complexity. And dividend issue or debt issuance or new debt issuance all increase the complexity. So if all this will increase the complexity, we should include all these variables in the model, right? We should control for that. Or otherwise, it may come from, the impact may come from all these factors, isn't it? So this is a validation because all these control variables also affect the ARC. So we have to control them into the model. Okay. So this is the explanation for those control variables. So here we can see let me ask you one question here, because it doesn't come somewhere. Let me connect it to the website again. Yeah. The Slido question I'm asking you is, what does ARC measure? So we have a 4 Multiple choice, we have 4 choice. One second, I just have to. What is not working again? Wait 1 second. Can someone let me know what's happening here? One moment again. Let me try the other network. Should be fine. What's happening here? Try it again. Not working. But can you guys answer me? Which would you pick? I'm not quite sure what's happening here again. Can you guys answer me? Which one will you pick for this question? What does ARC measure? Let me count by myself. If your answer is raise your hand A, raise your hand B, raise your hand C, raise your hand D. Okay, thank you. All correct. Yeah. So this is the measurement for this one. Okay, then we skip this slide and go back to 3. So this is the first misstatement report. higher complexity is positively related to high misstatement. No matter how you control all these business segments, foreign units, readability, or 10K reports, no matter how you control or without control, the results are very consistent, positively related to misstatement. Higher complexity is associated with higher misstatement, no matter whether you control those important variables or not. And again, this is interesting. Larger number of business segments are also associated with misstatement. So sometimes you cannot conclude that is come from complexity. Actually, this may also foster misstatement, but because the model already control for this, right? So if we don't have this impact, it also display significantly positively relationship with our business segment, right? So this is a very robust 1 and 3. And this is without accounting, all this also will cause the misstatement. So this is one dimension 1, hypothesis 1. Table 4 is related to material weakness. So materials weakness, complexity, higher complexity is associated with higher material weakness too, no matter whether you control or without control all these segments factors. Very robust. The same logic as table 3. Interesting is if you have foreign unit, you will show that a higher material weakness too. It's different from the restatement. It came from business segment, and foreign units will be associated with the material weakness too. Longer report have some concern about the material weakness too. Accrual quality doesn't have any relationship from this model. So complexity doesn't mean quality is bad or lower. It's not significant from all of this. Only longer report cause to lower accrual quality. So longer report, you will find that accrual quality might be affected. And again, this is a delay. So longer report. This, I have curiosity. You can explain for that. Higher complexity is associated with higher audit delay, right? Right. So this is a significance and positively related to each other. So after control, the business segments and geographic segment. But interesting is positive we can accept, but geographic segment inversely is negative. So if I have Asia, we have Europe, we have America, for Africa segment, actually auditing delay is negative, not positive. That means you might submitted the report earlier. Is that mean? Yeah, so this is interesting. Geographic segment is negative related delay will not delay or the lower probability of delay. Readability also affects the delay. Hard to read will increase the delay. Longer report will increase the delay. Makes sense. And here is another size effect. I will not explain because the sign seems like a different, right? We would assume that larger size will have auditing delay, but it's negative. Here we can see the negative. I don't know why. Maybe you can think about that. And the auditing fee, on average, is like $1 million and about. So higher complexity is associated with a higher fee, no matter with or without control. All this important and crucial validity factors. So all significant. Increase the fee, complexity. And these are the control variables too. And you can see that usually all significant. So this is the implication of the economic implication too. So this is a cost problem. So higher complexity is associated with higher likelihood of misstatement and material weakness. And it's associated with a longer auditing delay and higher auditing fee. And also, you have a managerial translation, meaning, so for the manager, you need to expect a higher auditing effort, more internal control testing, or more chance of errors. You have to be very careful. And for the board or the committee, meaning that means if you have a higher complexity, that means your company's risk multiplier is higher, risk factor. So all this tech can be disaggregated. In general, we have the number, right? But you can separate into leasing, tax, fair value, or the other issues. So you are not just a restatement. You can give another detailed test like this tax restatement, not the others. This is a leasing problem, not the others. So if leasing restatement is given a 1, then you can have the other paper using their disaggregated tab. Okay, so you can also use a shock to do another paper because of this shock change the rule, change the standard. So before the standard, after the standard, the result might be different. So can you guys now answer this? But I'm not quite sure. My Slido is working now. Let me try it again. Can someone help me to connect or something? Because I tried to connect it, but it doesn't work. What's happening here? If like one word, what will you say for this? I am look out, but actually I'm looking. I probably will not spend time to do this again. But it should work, but doesn't. But I only access some audience in public. If in 1 word or 2 words, what's your answer? One word or 2 words? What would you answer? We have one group. If 1 word or 2 words, what's your answer? 赖光无海 you. Huh? Longer report than the lengthy. Huh? So 1 word or 2 words. Complexity. So you say it's a longer report or lengthy report. Okay. What's your answer? Hello, you. Accounting detail, and your answer. Disclosure information. How about you? Yeah. In 1 word or 2 words. What makes a company so complex? Adjustment. And how about you? Restructure. Okay. Information diversity. And you? Uncertainty. Accounting guy. Complex process. And you? Diversity. Okay. So I guess you will say like this. So derivative. Did you say? Yeah, your answers are a little different from my guessing. But all of you answering correctly. Okay, so actually they propose the definition and the measurement methods for the paper. Okay, let's continue to conclude this. What's your ranking for this? This is a Slido questions, but my Slido now is not working. So can you guys give me your answer directly? Ranking. If your complexity jump this year. And the related is your auditing committee. You have to respond for this jumping, right? And then what will you do? First, jumping, 20% is a big problem. How will you respond for that? Which one you think the ranking 1? If your answer is A, raise your hand. Ranking 1. If your answer ranking 2, raise your hand. C, raise your hands. D, raise your hands. Why D? Your jumping complexity is so high. What's the committee should be responding? All these are correct, just priority. Okay. So if it's me, I will say maybe specialist. Yeah, maybe specialist. Accounting related or technical accounting related. Just hire the specialist to solve this problem. If 20% accounting, the complexity jumping. Okay, this is but the others choice are also correct, just different ranking too. Okay, so Slido not working, and it's the same thing. It's a technology firm. Well, you present like a SMCI, right? So most likely, yeah, something happened. So like sometimes like a shock, or sometimes like a, yeah, judgment and so on. So my comment for this paper is this paper say something but cannot claim something. First is this is a complexity is a risk proxy, not the multi-detector. So you cannot tell the happening separate is the honest mistake or on purpose, strategy, opacity. Because a mistake is mistake. You cannot tell it's an honest mistake or I'm not on purpose. But sometimes it's on purpose, but behind or implying in the strategic opacity. So this paper could not tell that. So can do something, cannot do something, cannot claim something. And complexity reflects the real economics, but it's not really just all bad. Sometimes you have to control for that, consider. The window, time window is very short. So for your reference, you can do much more. The shock can be replicated in this era. So it can do it to 2025. Potentially, I have to mention, firm with richer disclosure may have a higher tag count number and also have better transparency. So interpretation matters for this paper. And the other is extension. I think you answer very well, but some paper, if you are really interested, you can do capital market, you can do governance committee, board committee. You can do a lot, or using the shock to do another paper. So all this related to this issue. Okay, you can do governance paper, capital market paper. You can do just external regulation shock paper for your reference if you are interested in an accounting paper. And I just mentioned that this tech is not difficult to calculate. Or you can do that. Okay, any other questions for the paper? Okay, if no further question, our discussion ends here, and I will see you next week for another new paper, okay? Okay, thank you very much. We'll see you next week.